2013, one of the first Bitcoin conferences in San Francisco, and I think he was about 21. And back then we were working on colored coins with Vitalik. This was before all of the other cryptos, basically. They're the master coin guys and colored coin guys. And I started talking to Adam, and as you all know, eToro is a trading platform, and I found a very young, enthusiastic trader. And I started asking him, what do you trade? And he told me, I'm doing arbitrage on Bitcoin on Silk Road. And on other, basically, on e-commerce sites that sold stuff in Bitcoin, he just bought them on Amazon and then resold them in Bitcoin on other sites. And that basically there was an arbitrage. He was making markets in the Bitcoin dollar basically markets back then, before it was a sophisticated market. And this was really the early days where probably most of the people here had no idea what Bitcoin is, or otherwise thought that everybody talking about Bitcoin was crazy or insane. So we're very happy now that crazy and insane took over. And it took over very swiftly both eToro and iAngels, so we took over the entire Assia house. And I'm very happy to have stayed in touch and found a friend in Adam along the years, and was excited when they started working on Zen Protocol, which tries to more specifically basically create a blockchain for finance, or blockchain for financial contracts and financial transactions, which is exactly where eToro is. So it was super exciting, and seeing his successful ICO was a super exciting journey for him. And I'll let them start the fire chat. Thank you very much.
Thank you.
So for those of you who are not very familiar, iAngels has been around for almost 5 years now, investing in startup companies in Israel and really opening up the ecosystem in Israel to a broad community of investors worldwide, primarily investing in technology startups. And through this journey, we've really started investing in blockchain-related opportunities like 2-3 years ago. So we had like 6 or 7 companies in our portfolio that have a strong relationship or correlation with what's going on in the blockchain industry. And so with this last year, it was very intuitive for us to take the next step and really be the only VC in Israel currently focusing on this segment as an additional asset class. And so this last year, we also opened a fund that's dedicated to blockchain investments, and we've been participating in ICOs and seeding blockchain companies, primarily from Israel, but also around the world. And you have a lot more information on our website, and I will want to invite you all to check things out, because we promote and we launch for accredited investors opportunities to invest in the most interesting ICOs that we find on a monthly basis. So I would highly recommend checking that out. And now the Blockchain Breakfast Club, or this expert series, was something that we were talking about together with the eToro team and the iAngels team about how can we better engage and better educate the ecosystem and promote some of the best projects that are out there. And we decided to launch this ongoing expert series, where every time we will invite an entrepreneur from the ecosystem to talk about his experience on the ICO and what can we learn from that experience, and really to learn more about the in-depth technologies that are becoming the fundamental infrastructure for kind of like that innovation curve. So this is really our first session, and I'm very happy to launch this one off with Adam Perlow. Adam, thank you for joining us this morning.
Thank you for the opportunity.
Very early. Tell us a little bit, as we heard from Yoni, you've been investing and has been an advocate of Bitcoin and this tech for a really long time now. Share with us a little bit from your experience, what got you excited about this to begin with, and where you came up with the idea to develop Zen Protocol.
I'd say I was a lot more excited about the social and anthropological changes that things like Bitcoin could bring than the technological ones. Actually, I don't think it's a very exciting technology, which is maybe kind of out of the ordinary in this space. I guess I was really attracted to Bitcoin because it was kind of like the natural outcome. It makes a lot of sense that we would use a digital asset like kind of digital gold to be money. To me, it makes a lot of sense that with Zen, what we're going to end up doing is society is going to move from a system today where, all of our wealth is held indirectly, right? You no longer hold your assets. You don't have your stocks, your bonds, anything in your hand. We don't operate under a direct ownership system today. It's all indirect through a third party who holds our assets for us. And although that just happened in the past 40 years, it only seems rational to me that we're going to move back to a system like we used to do once we have the option. So I think that's what's very interesting to me personally.
When did you what was the aha moment that got you going with this? Because you've been working on this for a couple of years now.
Yeah, so we were working on another sort of wallet for Bitcoin to try to lower the barrier to entry so normal people could start to use it. And also I guess back in 2014, we already kind of foresaw the kind of scaling issues we were going to see. So it was a combination of lowering the barrier to entry and then making it easier to send around Bitcoins. And then what happened in 2016 is we saw a lot of people lost a lot of money in the DAO hack in Ethereum. And we kind of had a while of feeling that this kind of generalized virtual machine isn't going to be production ready to manage the world's finances. But the fact that they lost all this money kind of confirmed that. And then we said, okay, we can build something better. Then I brought a team together, and that's what we've been doing for the past year and a half.
Amazing. So for those of you who are not very familiar with the project, Zen is really creating a new blockchain for the financial industry and focusing on derivatives and a lot of financial transactions that require security and scalability and privacy and a lot of different themes. Now, I would love for you to give maybe for those of you who are not very familiar a short overview and also try to explain to us why you decided that you need your own dedicated blockchain to do that.
So if you think about it, a blockchain is a way to have a bunch of nodes all around the world agree on what happened chronologically. And prior to us, you had Bitcoin, which had support for a single asset. It was just Bitcoin. And the way you would hold these Bitcoins were in something called a script. So essentially, every sort of Bitcoin transaction is its own mini smart contract. You can even think of it. A very, very simplistic one. So essentially, you can only move Bitcoins on Bitcoin, and you can hold them under very simple conditions. And then we had projects like Yoni was talking about, what Yoni was into, colored coins, and we had Mastercoin, and you started to have projects that were trying to do multiple tokens. And then you had Ethereum that came in and they said, let's have enable very complex conditions to own these tokens under. Things that would be more advanced than, let's say, a trust or a time lock or a multi-signatory account. Yeah, and so then I guess, to us, right, it always made a lot of sense. That's what people want to do. They want to be able to move around a wide range of assets and be able to hold them under a complex set of conditions. Conditional ownership could also be something that would, for example, allow you to say, if the price of Apple goes up, I get the token, and if the price of Apple goes down, you get the token. And what we saw actually evolving in the space would be this kind of generalized virtual machine, right? So what Ethereum came in and they did is they said, we're going to have a virtual machine. It's going to be very generalized. It's not going to be financially focused. Everything's going to be on the blockchain. And there was a lot of talk back in the day about, decentralized Uber, decentralized Facebook, decentralized everything. I wasn't a big advocate that was going to work out. I don't think that has. I think what we've seen is actually the premise was correct, and that all that Ethereum is doing is being used for tokens. Yeah. So that's how we got into this. Now, to answer your question, I guess the next one, you said why to use our own blockchain, right? It was essentially part of that. So once you're willing to give up the generality of having all this flexibility to build any sort of decentralized application, you can be a lot more focused, and you can build something that's a lot better in every single way you can think of it. For example, having tokens instead of an ERC20 contract. For example, treating contracts as their own independent object. In our platform, for example, our contract execution doesn't care if someone else is playing CryptoKitties. You can still do your financial transactions. So essentially, we're not like a virtual machine, and you can think of us just how a normal bank would want to run their finances. That's what we're built for. We're built to make that very easy and simple, and they don't have to care about what's going on in the network or scalability or any of those kind of issues.
Mm-hmm. So at the end of the day, if I want to for instance, create a smart contract where I want to sell my Apple stock if it breaches a certain level, etc., and create all these like sophisticated rules, I can do that on Zen Protocol. And this is really what I would come there to do, because you were talking about the type of assets that you can do this on. But do you think it will be strictly, like if you're building your own blockchain, will it be strictly for financial assets, or do you think it could be applied to other types of sectors?
Yeah, of course, any sort of transaction. Any sort of transaction. So
currently, it's like more around stocks or derivatives.
Stocks, currency, futures. The next that we were talking about this morning. Any sort of financial asset. It doesn't have to be necessarily like complex ones. Yeah, it can be simple currency.
Now I know that these. You've been working on this for 18 months, but a lot of people are now talking about creating their own blockchain and solving some of the key challenges that we see in other blockchains like scalability, etc. So what is the key differentiator for your approach? Like, why would this blockchain win over some of the other ones that are currently being developed?
I think that the most important thing is actually existing. So executing is something that that has to actually be done. Talking is cheap. The main issue is that a lot of these people who have I've seen recently a lot of the thing that's gone in this space, and that's actually one of my main motivators to come here today, because from someone who's been in the community for a long time, I think it's very important to provide people with information they need, because I feel there's a lot of misinformation out there today. Now, with regards to these platforms, I think that a lot of people are obviously jumping on the bandwagon, but they don't necessarily know what the actual problems or what the source of the problems are and how they can be solved. It's like scalability is a meme. I don't know, sharding is a meme. There's kind of memes out there. They don't necessarily understand the underpinnings of how they work. So, for example, if we're talking about things, let's say like scalability, the fact that we can know how much computational resources it's going to take to execute something ahead of time. So let me give you an example for that. In Ethereum, in Bitcoin, you have like the block size. In Ethereum, you have the fact that you count gas. With us, what you do is you prove ahead of time how long it's going to take to execute your contract. By doing this, you know that there's not going to be any malicious code in the system, but at the same time, what you can do is you can essentially compile your contract, and you can execute it much faster at the same speed that your CPU executes your code. You don't have to wait for it to. It's not extremely slow. So that's one of the, let's say, main scientific innovation. The fact that you can calculate costs ahead of time, it opens up the door to be able to make big advances.
And do you keep it, by the way, under your hood, for instance? Like exactly ahead of time how much time it would take to execute the transaction, and you solve the computational or resource challenge for the user, or do they have to do anything to make it work?
Our SDK, we calculate the cost for you, so we prove it for you. You probably don't have to be technical at all. Actually, most of what we're looking to do is just provide templates. So you just type in, I want to create whatever, this kind of stock. This is going to be my strike. That's going to be my premium, etc., etc. Just on the go, create the financial instruments. But from a practical point of view, it's very easy. No problem at all.
Yeah. Okay, so what other use cases you're excited about, like for Zen Protocol?
It's the anthropological change here, much more than the technological one. I think that, for example, I was looking the other day, the maple industry in Canada. It's one of the only things that you don't know. It's funny, but they have to have price controls, right? Because it's kind of like everyone gets free maple syrup there. It's more valuable than just cutting down the tree and selling it. And the reason is that everyone's essentially dumping their maple syrup on the market, and then the price dropped, so they had to get a cartel to come together and hold it. And if you look at most commodities, right, there's a lot of consumer demand, and there's a lot of investment demand, and there's a limited amount of pancakes and maple syrup we can eat, but there's probably investment demand there. So if someone came in and structured some sort of instrument where you could get an investment demand there, it would probably solve that problem, and you no longer need the cartel, and everyone would make a lot more money. But so it's not necessarily something that needs Zen. It just needs someone to actually go and do it and be there. And you need to have someone who's not going to be. I think the biggest part of this blockchain thing is that there's no one that needs to sign off. There's no one that needs to essentially say, I'm going to be the one to authorize you to issue these maple syrup futures, because I don't want to lose my job. If I'm working as a regulator, no one's going to be the guy to sign that piece of paper. But with us, since there's no one responsible, you can make that happen.
So, reading through the white paper, there are some new terms that come into play, like two of them are resource-bound and active contract set. So how is the use of resource-bound allows you to get rid of some of the virtual machine of Ethereum, the one that you mentioned before, that's a limitation?
The way we actually did it, so like why didn't, for example, Vitalik or one of the first blockchains do this? And I think it was because at the time, it was only around 2015 where Microsoft Research and INRIA, which is the French, like Madame Arraché in France, came out with this new language called FSTAR. And what FSTAR allows you to do is it allows you to it's a language built for formal verification. In simple terms, it means you can prove certain properties about your code. And so it was because we could borrow that technology from them that we were able to make this kind of technological leap that would allow us to, execute things 1,000 times faster. With regards to the active contract set, so you have to think about it. Well, if these contracts are like not living in a virtual machine, because a virtual machine's purpose is to sit there and count what happens, where are these contracts living, who's paying for the storage costs, and that's where we have the active contract set. So what we do is we essentially come in and we say, okay, for every block that you want miners to store this contract in memory, they have to pay some fee, and they're going to be abstractly thought of as an active contract set, but it's just the collective RAM of all the miners.
And what would be that cost, for instance? What would be that fee?
It would be a per block basis, so per megabyte per block. Yeah, we're trying to keep it as cheap as possible.
So let's talk a little bit about the term Oracle. So a lot of projects are talking about this, and you proposed a solution. So what is an Oracle? Let's explain to everybody here and why they're necessary, and how do you solve that problem?
Sure. So the oracles, what are they? So if you want, let's say, a smart contract to be able to operate on an external event, for example, what the price of Apple is, then the blockchain doesn't actually have any way to be aware of that price. It's not a deterministic issue. So, for example, if you think of deterministic things, it's like, is this cryptographic signature matching this public key? That's something that you can actually determine deterministically. Something you can't determine deterministically is, something that's more like subjective, what the price of Apple is, because not everyone necessarily agrees on it. And so oracles are essentially people who they act as a bridge between the real world and the blockchain world. They'll come, they'll get the data, they'll put it in. And we're talking about it in stock prices, but other people may talk about it as if did this Facebook API create this call, or something else happen, or did someone get in an accident, or it could be 101 things, but any sort of external data. They're the bridge. They're the bridge between the real world and the blockchain. Exactly. Not in the exact same context, but yeah. I think that a lot of the solutions that were looked at on Ethereum were coming from the decentralized app side. So they had a lot of issues with us. We were very simple. We just said, since all we're really interested in stock prices, what we're going to do is, not to be too technical here, but we're going to allow people to essentially take all the tickers that occurred within a certain block interval, put them all together, compact them, insert them into the blockchain, and whenever it's necessary, someone can ask for a certain piece of data using something called a Merkle tree. They can say, I want to know, the price of this stock or the price of that option or something like that.
What is it called? Sorry?
A Merkle tree. Merkle tree, yeah. It's a way to essentially compact data together and commit to it. And then you can reveal a path. So the path is the actual thing that you show. So people just run this. We're actually working with a few people now in Trinio, Leverate. We already have a few big ones coming on board, and obviously anyone can act as an oracle.
Nice.
Maybe you guys as well.
Maybe.
Be happy.
I'll think about it. Okay, cool. So I wanted to spend some time to really understand more about your ICO process and everything that you went through. I personally, was there for some of the intimate talks about really how to structure it, how to price it, how much to raise, so many important questions. And I want you to share from your experience, how's that been like, and to structure it and to go about doing it, deciding to go down that path.
So fair enough. So when we decided to do the
ICO,
ICO,
a deep breath.
No, it's funny.
Already after it.
It's
done.
It's reminiscing on it. It's reminiscing on it, right? It's a good experience in one way. So when we started to think of it, it wasn't really, the term ICO didn't exist. I guess it came in later. Not a big fan of it because I think that people are just asking for trouble, and it's become a very negative connotation. I mean, I myself will say that I'm not the biggest fan, but anyways. The way that we decided to go about it is, you said okay, the way we determined the amount of money we were going to need is by, building a budget, saying what a reasonable amount would be. The whole process, I can say a bunch of things. What do you think would be in particular interesting about it? Anything?
Well, I guess I think one thing is really how to create kind of like that economics for the ICO. What do you feel? Do you think that companies should raise as much as demand, can hold, and like to aim higher to get that extra cushion? Do you think they should be like very transparent and fair and raise just what they need to execute? There are a lot of unknowns still, so and people are not going to do an ICO every month, so they really need to be able to look far into the future and understand what kind of that resource requirement is going to be. You need to build a team. There are a lot of things that are coming into play, and that's just about the structuring. I think we can also talk about also the marketing element and the promotional element of the ICO.
Sure. So, okay, I'll just try to give some general thoughts here. With regards to the ICO, the way that we did it, the way we saw it is. It was building a team over a year and a half, and actually we didn't do any preparation for the ICO. That was actually a mistake in hindsight, perhaps, but we didn't like have a room of people sitting there in call centers. We were just essentially developers, and over time.
You're a very lean team, right? How many people are you?
Yeah, we're like seven, 8 people, and although growing now, right? We were just like doing our thing, and people started to say, let's give you money, and people just started to give us money, and from that it kind of grew and it took off itself. I think that's something that for me can happen more because people in the community know me. It's kind of like organic, and it's a lot easier. And actually we did something funny, which was we made it seem that things were going a lot more slowly. So a lot of these ICOs, they usually instantly sell out. What most people don't know is that we were doing actually quite well, but we purposely made the counter look a lot lower, and that created this like long time span where everyone who wanted to could get in, and then all of a sudden it shut, and no one understood what happened. But it was funny.
No, it shut down on me. That way I get in.
Yeah, so I should have, but I guess that was a better outcome than it just like, boom, day one or 2 seconds and it's over. So making it look slow, I guess, was better. So that was maybe a good insight. I think that people should, if they want to get a good community, they need to make sure that everyone can get in. And the way to do that is not necessarily by having a huge market cap. So that's usually the way that people went about it. There's just, I guess that's why I'm saying this. There's other ways to go about it. It's market psychology.
What, like limiting like the participation, allowing more people to come in, but they have a personal cap that's like relatively low, or like what would you recommend?
So reducing FOMO is the first part if you want to make sure everyone can get in. But also, limiting personal caps is I'd say a good thing to do. Kind of hard to do technically, but let's say you can go ahead and do that. I think, to answer some other questions you said with the ICO is essentially, there's this question here, how much money should you raise? And I think that you should raise the amount of money that allows you to make a better return than what the person can make, let's say, in the normal market return.
What is the normal market? On Bitcoin or
no,
on dollars?
In their portfolio, adjusted, let's say they put 1% of their assets. I mean, they need to take their money and say, how, but let's say whatever, well, now the market return sucks, but let's say 5% a year, or whatever it is. So you need to take, the risk-adjusted return, whatever it can be better than that. On the other hand, we've recently seen there's a lot of demand for pumps, and so, supply must be demand. So that's an open question.
Isn't it always like, shouldn't you always like raise a little bit low like demand so that there is demand when you're on the exchange, etc.? I mean, in your case, it's going to take a while now, right? Like you can't like get in on Zen until you're officially are on the exchanges. So when is that going to happen?
So we're going to be launching in April. We may create, considering of looking at making perhaps a vehicle that will allow also mainstream liquidity to get in. Sort of like an ETF, but looking at around April, May.
And so if we're talking about, because I think this is also something that people should be aware of when you're looking to either participate in an ICO or you're looking to launch an ICO, there's a great deal of working kind of like working the community and working the ecosystem to get the right kind of investors on board and the right kind of, I guess, marketing communication going. Anybody here who want to start following Zen Protocol is welcome to join their Telegram. But how did you go about it? Did you do that by yourself? Did you have like external, like professional help to manage all that? Because I know the way that it usually works, there's like an inflow of so many questions, so many comments, and you want to be responsive. You want to be able to work the community. And how do you manage that kind of expectation?
By working 25 hours a day. I mean, that's how we did it.
So it was all you every time.
Oh no, I mean my team, my team, me and my team. Yeah,
that's
obviously the credit all goes to them. But it was essentially, we didn't use any outside. These like underwriters / community builders, what you pay for, what you get, what you pay for, right? I mean, you have people who you have this influx, but then they leave and there's no interest, and the coin usually falls later, and I just don't think it's an optimal outcome. You have to do it naturally. My suggestion would be, number one, it always helps if you're building something that makes sense. If you actually have a real deliverable product, it's a lot easier to get people excited about. And I'd say it's very important to if I was doing it again, I'd say, not to be as much in my shell, go out there more. I think we only went to like 2 conferences or something. I don't talk a lot. So yeah, we need to be social and go out there and let people see you. They'll come to you. I think that's my only word of advice, but maybe that's to myself. I don't think there's any lack of that for a lot of the projects I see today.
Mm-hmm. So, I mean, I think a cool thing about Zen was that you actually had a live beta working before you even went to do the ICO, and the ICO happened organically, of course. And I think that is also very unique because a lot of the projects out there, they kind of like they raise the seed or they even raise the ICO in order to execute on that dream or on that white paper promise. So what was that like? Was that something that you found was very special? And share kind of like with us how much you ended up raising.
Sure. So I think that the thing that was important to us to build it first was, number one, we started this project when there wasn't the market that there is today, so I thought it would be totally ridiculous to anyone to hand me any money before I had something. So I just thought it from a practical perspective. And then the second thing was, since I'm young, it was very important to me to know before taking anyone's money that I can actually execute. I wouldn't want to be like, oh, sorry, and lose their money. So I was willing to lose my money, but not other people's money. So I think that was why we did it. It wasn't like to be a differentiator, although I guess it turned out to be once the whole ICO bubble started. With regards to what we raised, I'll say a couple thousand BTC, which the price moves all the time, and I don't we sold some, we held some. Try to manage our risk appropriately. Thank you very much. I appreciate it. Try to manage our risk appropriately. It was around 2,000 BTC.
Okay, great, good for you. So now it's all about work and preparing for the launch in April.
Yeah. I mean, I'm very, very blessed to have a very good team behind me. And I mean, it's amazing to see what we've been able to accomplish. I'm going to say, have been able to accomplish in the past couple months. I mean, we were saying, May, and now it's becoming April. I think we're going to end up in mid-March doing it. We're just, ahead of deadlines, and we're very happy building out a team.
Under promise and over deliver.
Yeah, I guess that's what's happening.
Great. So really, really excited. By the way, are you investing in ICOs, or like, are you excited about other things that are happening, other projects that you feel,
I haven't. Not to sound arrogant or something, I just don't have the time, to be honest, to research the projects. I'm looking into, I can't even manage my own portfolio correctly, but I would say that
maybe Zen will help you do that.
Once you get some more help on board, once we scale a bit, I'll have hopefully I'll have some more time. Probably won't, but we'll see. But I'll say that the things that excite me generally in the industry is, I think that the one thing I'll say is I think that the whole scaling debate is quite dumb. I think the thing that excites me is just on-chain scaling, which seems kind of contradictory, but I just think that people should scale on-chain. Everything's going to be fine. And I what excites me is to see a resolution to this whole Bitcoin debate. I hope that it gets resolved somehow. hope isn't a strategy. I'm kind of giving up on that, but whatever. Nothing much exciting in this space, to be honest. I'm too excited.
We can all go home. Okay, great. So thank you very much for the overview. Yeah. And we're going to open up to Q&A.
What would be the first POC of Zen? Like you're dealing with a very sensitive matter when you're speaking about stocks, unless you're speaking about the CFD kind, which is different approach.
So one of the first people that are actually building on us is a company called Vinex. It's essentially wine futures. I find actually futures and bear instruments and structured products to be more interesting because it's the stuff you don't have access to today. I definitely don't want to be the guy facilitating people making empty promises and taking advantage of people. But also at the other time, everyone's very sensitive to all this regulation. If you look at how the regulation, again, I'm not a lawyer, right? Take your own advice, but the way regulation is usually structured is that the jurisdiction falls either if you're making the offering in their market, so like if you're on the NASDAQ, then it's an American offering, or if you're making the offering directed at a certain set of people. If you're not doing neither, right, you're not directing it at one group of people, nor is it in someone's market, there isn't really jurisdiction. So that's kind of a by the way benefit that you get here. I'm more excited about the special and the special kind of products that couldn't exist previous to us existing. The niche, like the kind of long tail YouTube effect, the niche products. But I think everything's going to be on there, either us or a competitor.
Do you use a kind of full of stake in terms of the nodes agreed between them? I didn't understand the solution in terms of the mathematic challenge or whatever is requested from the protocol.
The cost bounds?
I mean the nodes that participate in the challenge on your protocol. Is it a kind of full of stake or?
So what we did is actually seeing what happened with Bitcoin is we have this concept called multi-hash mining. So you can use multiple proof of works to, so for example, let's say SHA-2 is what's, for example, used in Bitcoin, and let's say SHA-3 is what most of our CPUs use on our MacBooks or whatever it is. And essentially, so what we have is a situation where you could submit either, the both Bitcoin miners and home users can both work on our chain, and you can change the ratios between them. So if Bitcoin miners accumulate too much power, more home users can do it, vice versa. And you could also, with that same mechanism of having splits, you can also say, well, one hash function, for example, let's say the home user hash function will benefit. Let's say per every 1,000 coins you have, the difficulty to find a solution to the proof of work gets lower. So you can like get proof of stake that way, but it's not the nomenclature of proof of stake.
Who would you consider your competitors if were to look at Zen Protocol and others?
I'm waiting to. I'm not in an arrogant. I'm honestly like I'm waiting to see them because I'm sure someone's going to come. It's too big a market to not come. But I would say that I probably see I don't see anyone in the crypto space, right? I think that crypto guys are doing a lot of like crypto stuff, and it's like the blockchain stuff, and the financial guys are still in their like private chains. But I would say, I'd expect some smart guys at some small like prop traders or some, small hedge fund guys to get together and say, what, actually we can facilitate liquidity here. Let's just copy paste the technology and go compete with them. That's where I'd be afraid of that coming from.
You talked about actually creating the infrastructure, but what about actually creating the marketplace, creating user knowledge? So you now sold the tokens. eToro has obviously created market usage. How are you going to go about doing that? It sounds like it's not come yet.
I want to emphasize that I guess we don't even view ourselves as a blockchain. We view ourselves as like a kind of a Wix for finance. So the way we view it as a holistic solution, right? In our software already, you have the whole interface, the whole user experience, etc. So you can already like it's not just a bare bones protocol. So we are looking further beyond just a protocol. And to be competitive with the bank essentially is what we're looking to do. With regards to how are we getting, I guess, liquidity on the platform, right? That's the other part. So there's two issues here, right? Because the users, I think the value proposition here is very high, right? Essentially, you can get banking services, you can hold, your stocks, bonds, everything you want in your own pocket. It's like it's cryptographic Swiss bank. And even though that word was used a lot, like, Bitcoin is a bank in your pocket, it isn't really, because it's only a bank in your pocket if you're willing to be exposed to the price of Bitcoin. We're really like a bank in your pocket. And so there's a lot of people who would obviously want this product, and on the other hand, there's a lot of people who could make nice spreads from being the guys who are like issuing the bearer instruments. So saying like, for example, I'm going to issue this token, and upon receipt of this token, I need to pay you back like S&P 500 value, right? So there's like a lot of demand from both sides, but there may be a need to kickstart that demand. And the way we're definitely going, like, let's put it this way, I want to be careful with what I say here, but to some extent, we're definitely going to make sure that happens. We'll make it happen. We're gonna essentially we're gonna make spreads. Either us or, let's say, a third party. It won't be us necessarily, but a third party will be making spreads. They'll be essentially managing a float. They'll be sitting in the real world, having a bank account, and when you come in crypto land and you buy a gold token or S&P 500 or whatever the instrument is, they cover in the real world. They manage their float. They make spreads. It's an easy way to print money, essentially, and it also helps the protocol at the same time.
Yes.
Hi. Can you elaborate a bit about the Zen community? How do you maintain the dialogue with them, and do they have any part in the decision making or the direction that you take in products?
Anything has to be like versus a product. I mean, Wix or Facebook or eToro doesn't have a community; they have customers. It's about having customers. It's about providing real value. The community is become like a meme, but I do, I'm here, but we want to be open and get feedback and talk to people, and the community has been instrumental. We found some good hiring people there, kind of community managers we've hired from the community themselves, so that's been easy. And it's good to be able, to onboard people, because I think that, when you have potential clients coming on, people who want to build on our platform, the fact they see that we're interacting with people, that we're open to communication, that helps in facilitating the process. The fact that, for example, if you say, okay, am I going to use Zen now instead of my bank? The fact that you see we have a community, it helps you, make that decision that we're trustworthy. So to that extent, I think it's worth having a community.
Do you have an example of a product-related decision or feature or something that was affected by the community opinion?
So, we only started with our community after we built our product. Yeah, so not really. But we do have decisions that we've made by having customers. So that's the thing. So via the community, we've had customers, and via the customers, we've made the decisions.
But going forward, like when you look at kind of like launching, new features or new capabilities, or do you think if you would, like, for instance, I think a good question is if you would have high demand for specific capability or specific something, would you prioritize that based on kind of like community notion, or would you just like stick to your roadmap and like may it come when it may come?
So definitely. So we're definitely open to providing the market what the market demands. On the other hand, we need to not like be lack of focus.
Confused,
yeah,
or...
we've been in this market for a while. We can't be like letting someone else, like, we can't have the tail wagging the dog. But on the other hand, that we're more than happy to take feedback and definitely change directions based on what the market demands.
Mm-hmm. Excellent. Questions?
Do you keep any kind of IP, or everything is actually open source after you give the IC?
What we did is so the way we've structured this is when people purchased, what they purchased from us was the right to use our software. So currently we hold all the IP exclusively. And that way we can actually sell legitimately, just like Microsoft sells you, your license to use Word, we sold you our license to use our software. And right now we control that software. Now in the future, let's say in a few months, perhaps we will create a new software license that will be much more, let's say, what you would consider open source like. And that way we get both the aspects of having what we want with the community, and there's no kill switches in the software. So if someone issues some sort of derivative and the government wants to shut it down, for example, not much we can do about it, unfortunately. But on the other hand, we can also actually legitimately sell you products when we were in that business.
Let's say tomorrow we have F-Star compiling to EVM, Ethereum's machine. What's the main difference from someone trying to build a new product? Should I use Ethereum or Zen? What's the main difference between the product?
The difference is because we have F-Star, you don't need to compile to the EVM. You can compile directly to .NET, or you're running at much faster speed. So it's by using FSTAR that we can get rid of the EVM entirely, I guess, is the main benefit.
It's only the speed issue, or is there other reasons?
So actually, at first it came from a security issue. So it's from an abstraction point of view, what you want to be doing is you don't want to be changing state. You want to be like locking assets to a box and unlocking them from that box. And this box is like the contract, the conditions under which you can lock and unlock assets. I think because that just best reflects what people actually want to do, with these tokens and contracts. So it came from a security perspective, because like with a DAO, because you didn't have that, and because one contract could call another, we had all the issues. But then we realized that once we started this paradigm from security perspective, you actually get huge gains in scalability, both because you can parallelize and because you can precompile, and because you also don't have to sit there and do another few operations to count for every operation you do of actual computation. So it was like a great byproduct, I'd say.
Win-win.
We talked about replacing the banks. You do a KYC process, and what happens? All the people are asking about what happens if I lose my key.
So these are two distinct things. One is like regulation and KYC, and the other is the responsibilities of holding your own money. And it's a new paradigm. And just like you would hold your cash, people have to take safeguards and best practices. Obviously, we have an epistemic responsibility to help you provide tools. So one of the things that actually needs to be on our to-do list is to provide more videos and explainers about it. But the solutions have gotten a lot better. If you have a ledger or a Trezor, they're usually very self-explanatory. Just make sure you back up your seed. So have a few copies of your seed of your 24 words, and you should usually be okay. But KV enter there. And one of the things we're doing is actually we're going to be coming out with ledger integration. We're going to maybe even, hopefully, if the project succeeds, maybe even develop our own hardware, which will be more user friendly. Now, with regards to regulation, that regulation is between the parties. So the issuer may have some regulation upon him, but we have no dog in that fight. That's between the regulator and the issuer. So everyone can be an oracle, which dictates the price, but also everyone can write contracts. So we already have like an engine, like a contract generator. So you without being a coder, but we also have an SDK, so you can actually code as well. So yeah, it's very open. Anyone can participate in the system. That's the point. But we're not going to do it all ourselves. The point is to help people on board.
Yes.
Sorry, just you were talking about in your talk about how you raise your token. You said you beat the market, let's say by 5%. And if you do have a token sale, what's your opinion on going forward with like securities issues, the Howey test, and how if you are offering like a return of something that can beat the market by your token sale?
Perhaps that was maybe a mistake on my part, but essentially, we're not. The Howey test wise, it's like, we're not promising, nor do I think actually any of these tokens are promising. No one's saying, listen, we're going to be issuing dividends, you're going to be making returns, etc. I don't even think, from a regulatory point of view, they don't fall into the Howey test. The reason is because no one's duping people into the fact of thinking they're going to make profit. It's just kind of stupidity here. It's kind of just like, like Pokemon cards or whatever it is. And if people are willing to assign value to Pokemon cards, then that's fine, but and you're not really doing anything illegal. Maybe it's fraud more than the securities test. I think it's less the Howey test here. I think that there's anything that's like wrong going on here, it's probably just outright fraud and not the necessary securities test.
Do you think you fit to the insurance market?
Yeah, absolutely. One of the first things we'd want to do is flight insurance. I think that's an interesting market. I think there's other interesting markets that I'm probably not the best guy to look at, but some people have talked to me about it. I'm definitely very interested in it.
Do you have any partners already working with you? What's the launch?
Not to name, there is one individual who we're looking at doing new kind of life insurance policies with. And a lot of the people who participated in the project are actually like financial institutions, or if they can't, under their own charter put the money in, the people behind the institution put money in. And so I think that we're going to have a lot of like how do I say, upward tick, when we launch out. The main things that currently we're looking at is things that, that there's a lot of like pent-up potential if they were to be liquid, but currently aren't liquid. So those could be things like, for example, like I said, certain futures or physical futures or real estate futures. That those kind of things are things I think are most interesting right now.
There's a lot of movement around energy trading, and do you see that as just a part? Should that be separate blockchain system, or do you see that converging into like Zen Protocol for energy and then for other markets?
I think so. If you've ever gotten one of those Nigerian scam emails, you know how they talk and they sound really stupid. And the reason they sound stupid is because they don't want to end up wasting time on someone who's smart. So they say that like if the guy is too dumb to not read the English correctly, right? Then we can probably get him. So I think that what's going on here is by they're saying like blockchain with green energy and a bunch of other like big words and that's the new Nigerian email thing. I think that's what's going on. But I'd be happy to trade. I mean, I'd be happy to trade things on the blockchain.
I was just meant the trading of energy is now a very centralized market, and there is a real need for allowing trading to be done peer-to-peer. Whether on the wholesale or on the retail market. So I think some of the ICOs there, like Power Ledger, are very serious in opening this market up from being very centralized to a lot of new things going on. So I was just wondering if
so you're talking
that is a real thing.
You talk like okay, so trading credit. I'm not too familiar with the energy markets of creating energy. Decentralized, like if this is what people creating, out of solar panels on their own homes or something. If it's these, usually these things are regulated by the state. If they're like making a lot of energy, it's like they're using state natural resources. I'd say that's a hard market to crack into. And I think that like we don't need a blockchain for this, a blockchain for that. I think it's just like in your bank account, right? That you hold all your stocks, so you're probably going to have a system that does everything. That just you hold all your assets in, rather than a specialized one for it. But I think that those guys who are doing the ICO now, they may play some factor, but as I think more of a normal market participant who is some sort of underwriter, like a normal financial institution would, rather than let's say something necessarily to do with blockchain.
You found yourself with 2,000 BTC, and you mentioned that you did some risk assessment. I mean, I would take everything to fiat currency immediately. Just, is there a bank that will convert you to $30 million?
So I said we had a couple. I don't want to. I think that in our short experience, right, what happens is, for example, so we got a Bitcoin, and then there was a whole Bitcoin Cash thing, and then we gave that back, and then it created these issues because I think it's very important to create some severance in emotionally, because a lot of these ICOs market themselves as like essentially stocks, and with us, since we're not doing that, I think it's very important for us to kind of, not to be mean, but just to create like psychologically a severance in like, you bought a product and that's it, and we're a private company now, which is why I don't like to comment on it too much, but I will comment generally with the banks of saying it's a problem. It's obviously people know in this space it's a problem. At the same time, there's a lot of industries that have suffered from problems financially, and there's innovative solutions. So we get by. But always, it's like whacking a mole. So yeah.
In terms of your early financial backers, did everybody come into the company by way of a token purchase, or did some come in for that as equity investors?
Everything was tokens.
It's very interesting. It's a good question, by the way, because from our experience, what we see is entrepreneurs that are really going down that track, even if they're not ready yet for an ICO and they need the funding, many times the vehicle that they would choose to raise capital under would be a SAFT, like a simple agreement for equity or token or equity. So that means it's like a CLA, and essentially it will convert to a token in a case that they're going ahead with an ICO or equity if that ends up not being the good solution for the company. So it leaves a lot of options open for the company, and they're able to seed it without determining ahead, like they're going down the equity route and then they're going to ICO, and then what is the meaning for the equity value and the enterprise value of the company. Now Adam seeded his own company, so he was like supporting his team before the ICO. Great. I would like to conclude our morning session. This has been great. Please follow our communication because we'll start to do this more regularly. I want to thank you, Tora, our co-host, and Adam for joining us this morning.
Thank you very much. I appreciate it.
And thank you all. Have a great day.